Now, setup number two, again, is another double bottom. This is going to be a different variation where the market comes down, it stops. Okay. For whatever reason it may be, it bought up. Since market stopped at this level and bought up, I'm just going to generate a zone. Boom. Why? It's just because market stopped there. I don't know why it stopped there, but I'm just going to mark this area. Clearly, that's a key level, right? Because it stops there. I mark that area for when and if market come back to that zone, and I will look to the left again to see what it does. That way I could join it once it gives me exactly what happened to the left that caused it to buy up. Now, in the case of this one, this is a different variation double top. Double bottom. Sorry about that. When it comes down, it stopped short, right? What I mean by short is the candle did not close exactly at the zone. It didn't hit the zone. Now, due to the fact that I'm using lines, that's because when we mark our zones, we always want to use the line chart. Why? Because the line chart shows us the exact turnaround point of the market. I want to make that very, very, very clear. Okay. When you are marking your zone, you always want to, one, use the highest time frame, two, transition from candles to the line chart, because the line chart show you the exact turnaround point of the market. Then you will put a horizontal line, and then you transition back to the candle. You identify the wick, and then you put the next line. Those two lines in between that will be your zone, right? So between the turnaround point and the whole wick will be your liquidity. I'm sure you probably heard of that before. Just to help you understand what liquidity is, it just means that's where the money is, meaning everybody's stop losses is at that area, buy limits, buy limits, sell limits, pending orders, take profits. That's where it's at. That's where the money is. Another way of saying that would be the market is going to take your order. If you had a buy limit, it's going to go ahead and put you in that order, put you in that trade. If you had a pending order, same concept, it's going to execute that order. If you had to take profit, it's going to close you out. If you had a stop loss, it's going to close you out, right? So that's where the money is, okay? So think about the word also stop hunt, right? So a lot of time when we get these type of setups, we will get a candle. I'm going to emphasize on this a little bit, right? The last selling candle will be something like this sometimes, right? Let's generate a black wick. So it will look like this. So, right, with the candle, it will look like so. But when you use the line chart, the wick won't be there. That's pretty much what you call a stop hunt, where the market shoot down, right, and then retrace back up as if it never went down, right? It's hunting your stop loss. It's taking your money. That's what it is. That's why it's called a stop hunt, right? It goes to clear everybody out to go back up, okay? So it's the same concept when you have a stop loss that's too tight, when it's not placed at the correct location. Market shoot down, close your buy, and then buy up. You know, you're going to act a little bit crazy after that, not because you didn't do the right thing as far as identifying the right setup, right? The only thing that you falter at was placing your stop loss at the wrong location, but market will go take you out and then to go your way. And all you could do is just watch the market go up. It's like, oh man, right? Now, so sometimes it looks like that. And of course, sometimes, you know, that's just how it is. That's just the body of it. And then you'll get your price action accordingly to go up. So now a lot of time when you get these double bottom setup, it's normally divergent. Okay. That's something else I'll go over on the video when I cover RSI itself. Okay. Now, the next setup we're going to cover is going to be the last one out of the three. And that is a double bottom where let's use this. Yeah. Where the second leg is lower than the previous one. So we have market selling. Boom. Right. It stops here just like before. Right. It stops there. And then it went up. Right. Boom. That's it. Now, simply because it stops right here and went up, again, we are just going to generate a zone. All right. We place the horizontal line simply because the market stops there. And we are going to anticipate for when it comes back to that zone. When and if it comes back to the zone, right? When it comes back to the zone, like so. Let's do this right here. Got to continue it like so, right? For it to go back up. Now, a lot of time you got to set up that look a little bit like this, where the first structure, right? And then the second one, let's slightly minimize it real quick, right? The second one would be, let's change the color, would be right here, okay? So naturally it stops there and then to go up, right? It's still a double bottom. Again, this right here would also be considered, well, it could also be considered a divergent double bottom where the RSI is either one oversold or one be divergent. Now, again, I'll go in that with detail in the next video, but one of the thing about this type of setup is a lot of time the last, let me move this a little bit, okay? The last selling candle, let's do this right here. The last selling candle could look like this, right? That's the last selling candle, and it will have an extended wick that looks like so. So when it comes to drawing your zone, if you use the line chart, again, you use the exact turnaround point, right? For the first line, right? And then you identify the wick to generate the zone. So I'm going to go back. I'm going to go to a different blank screen so I could go over that. But this is variation number 2, okay? So double bottoms comes in different variation. To be more specific, there's about 6 different variation. I do have all of them available on the ultimate buy the ultimate buying setup, okay, available to you on Amazon now. And of course, mastering the bearish forward covers everything and anything that you need to learn to understand about the sell in the market, the setups, how it looks like, the different variations of the double tops and the break and retest that follows after that. So I focus on one specific thing. That way you're not all over the place. This one just covers everything that you need to understand about buying, okay? And the other one covers everything that you need to understand about selling the market. So that was variation number 2, where the second leg is somewhat lower than the previous one, right? Now let's tackle this a little bit, right? With this, we're going to have this right here. All right, you see that? So what we have is market selling, right? We have a selling market, which is a bearish market. It stops right there. That was the last selling candle, right? This is where it closed. That's the lowest it went, right? That's the wick aspect of it. So that market went all the way down here and came back and closed at this point. So that's how it would look like with the candle. And when I put my line chart, my zone would start exactly here, going, ooh, not the prettiest, but okay, going straight across, right? That's the first aspect of the zone because this is the exact turnaround point. The second part of the zone would be the wick, right? Let's we could change the color just a little bit, like so. You see that? So this is your zone. All right. This is your zone. A lot of time when the market comes, we'll get something like this. See how we hit the zone, right? Sometimes we get something like this. Doesn't exactly hit the turnaround point. And also we get something like this that falls into the zone where the last selling candle, right? Where the last selling candle body will look somewhere like this within the zone itself, but it's still within the zone, even though it's a little bit lower. All right. All we have to do is wait for a PA to go up. So what we're about to do now, everything I just went over, we're going to go over each one of them, actually looking at the chart, showing you how it looks like, starting from the highest time frame. So let's go ahead and jump straight to that. Now, one little thing though, before I do go to the chart itself, I just want to make sure you understand when it comes to these first double bottom setups, right? You always use the highest time frame. I just want to repeat that to make sure you guys understand how important that is. Okay. Always use the month. Okay. The week, that's the second lowest, and then the daily. Right. Other than that, you don't use no other time frame. Okay. For your technical analysis, every setup that you're looking for, either for the buy or for the sell. Okay. Now, if you're somebody that's trading gold, due to the fact that you've been at an all-time high, you probably currently just now have a weekly structure point, but for the highest time frame you'll be using for gold will be the daily time frame. Okay. Because there is no infrastructure to the left to anticipate, oh, last time it was there and it fell because it's been at an all-time high. Okay. So your first turnaround point would be a daily break and retest structure. Okay, but for the most part, monthly, weekly, and then daily, and of course the 4 hour time frame. You're gonna sit on that 4 hour time frame, wait for market to come to the zone itself. Remember that zone is on the higher time frame. When you go to the 4 hour, you don't switch it, and then you wait for your price action in the 4 hour. Okay, now let's go ahead and jump into this real quick. All right. So we're gonna go ahead and just identify, easy, simple double top. I'm sorry. We're gonna identify a double bottom. All right. So let's collapse this real quick so we could get more out of this. This does act up sometimes, so I do apologize. All right. So I see 1, 2, 3. I see a few already. Okay. So this one right here is gonna be pretty nice, actually. Right. So we could focus on this one right here. Okay. We're gonna stretch this out. All right, let's move a little bit faster with this. Okay. That way you can see what I'm talking about. So please understand we are on a daily time frame. Okay. Now we're gonna look at this point here as the last low. And what we're gonna do is we're gonna use the line chart, right? When you use the line chart, it may not look exactly like a double bottom. Now, me personally, what I like to do is I like to use the trend line, right, to start exactly at the turnaround point and run it straight across. Now, I do this because I want my chart to be clean, not overwhelmed, right? See that simple line. Now, that's the first turnaround point. Once I transition to the candle, now I need to identify the wick low, which is right here, right? Let me lock this in, that way I don't move it. Now, this is going to be my next zone. My next zone start at the wick right here, okay? And then I'm gonna go straight across just like before. Okay, I'm gonna go ahead and lock it. That way it doesn't move anywhere. Let's expand this a little bit because I want you to see how it looks like. Okay, see that? Now, this will be one of a variation when it comes to a double bottom. I know we have a triple, but we're gonna focus on the first one first, right? Notice how with the wick, this wick dumped all the way down. Not only that, it went a little bit lower. Now, when we transition to the 4 hour time frame, it's gonna look a bit different. It's gonna look as if it broke to give you a new lower low. This is what I mean by that, right? Remember, see, this is the zone. Also, if you choose to use the rectangle property, I'm with it. As long as you understand your zones start at the close of the last selling candle, and then you're gonna match it with the wick. The wick could be, excuse me, sorry about that. The wick can be the bearish or the bullish candle itself, whichever is the lowest. That's the lowest you're gonna measure it with, right? It will look something like this, okay? Boom. All right. That's how it would look like if you was to use the rectangle property. All right. Now, let's go ahead and transition to the 4 hour time frame. So what I'm gonna do is I'm just gonna collapse it, which is gonna make it a bit easier for me to find when I go to my 4 hour time frame. Because see how it goes away. So now I could just drag it and move it like so. Let's do a little bit more collapse. There we go. All right. All right. Ooh, would it be? Let's see, get more out of this real quick. Okay. There we go. It's right here. It's literally right here. Okay. So let's expand, stretch out, get faster with this. Okay. I know the smart board look pretty dope sometimes, but a lot of time it could be a little bit crazy with it, Wait, did I move it too far? Yeah, I could lose it sometimes. Sorry about that. This is just happened to be different setups that I've been back testing. I have to collapse again. Okay, there it goes. Right here. All right. All right. So no. This is not it. This is crazy. Hold up, man. Let's go back to the daily one more time. Making sure I get this right. Okay. What I'm gonna do is I'm gonna get rid of these right here. Okay. Because you spend a lot of time studying, reviewing what the chart gives you, that we have a much better understanding of that. So what I'm gonna do is I'm gonna box this, which is gonna make it a bit easier for me to identify when I go to my 4 hour time frame. Okay. That will be it right here. Just making sure we good. Okay. Back to the 4. Drag this down. Let's collapse it significantly. Okay. Bring this up to the side. There we go. See that big square right here? All right. So this is insane. It's about what? I don't know how long is this now. 15 minutes. I feel like it's a whole 15 minutes just went by. Just me trying to find this. All right. So it does that and it hide it also. Where are you? I hate it when it does that, but this is crazy. Oh, okay. So when I extend it, see, just to go this way, what it does is it change a bit because of how much the market had bought up, right? But this is it right here. Okay. Sorry about that. I'm blocking the screen. So back to where we were. So I just want to make sure you guys understand that. Also, look, I'm stretching it out as much as I can because I really want it to stand out so you can see exactly what I mean. Now you see the zone. Now when you do mark the zone, like I said before, you don't switch it when you go to the 4 hour because the zone is based off the daily time frame, and then you just use that to go to the 4 hour, and then once the market come to the area for you to look for the setup itself so you could buy the market. Okay. It seems a bit difficult, but that's just how you draw the zone. It's gonna one of the reasons why I use the line chart also is because it allowed me to mark this and it's not overwhelming when I go to the lower time frame. Sometimes when you mark your zone on the higher time frame, you come back in, it could be a little bit overwhelming because it's all gray or very colorful. Okay. So when you drop to your 4 hour, that's how it would look like, right? So see how it hit multiple times? It's the same daily zone. All we waiting for is for a bullish engulfing, right? Now you see how this literally went a lot lower and it came back to close. If I use the line chart, it hit it exactly. But when we go back to the candle, we see how low it actually went. Okay. So that is very, very important when it comes to understanding how the chart looks.